Welcome back to the Explainer, everyone. For all you focus learners out there, grab a notepad because today we're breaking down the absolute most massive, chaotic, and frankly historic market event we have ever seen. We're talking about the June 12th debut of SpaceX on the NASDAQ under the ticker symbol SPCX. Now, if you follow the markets, you know the hype is astronomical. But today we're looking way past the headlines to understand the true structure of this historic IPO. We're going to completely unpack the mechanics, the money, and the massive pivot in Elon Musk's corporate empire. Okay, let's dive right into this. Look at that number, $1.2 trillion. By the time the closing bell rang on SpaceX's first day of public trading, the stock's performance literally propelled Elon Musk into becoming the world's first ever trillionaire. According to the Forbes real-time billionaires list, his personal net worth hit $1.2 trillion. It's a financial milestone that completely resets how we even measure corporate wealth. And, it all stems from the sheer magnitude of this one specific public offering.
Which brings us to Section 1, the trillion-dollar launch. Breaking records, and quite literally, breaking the market. To understand how Musk hit that trillion-dollar mark, we really have to look at the unbelievable mechanics of the IPO itself, going where no public offering has gone before. SpaceX unloaded 556 million shares at $135 a pop. That instantly set the company's initial valuation at $1.77 trillion. Just wow. And to put that into perspective, that scale completely obliterates the previous world record for an IPO, held by the state-owned Saudi Aramco, which raised up to $29.4 billion back in 2019. SpaceX didn't just edge past that record, they utterly crushed it, raising an astonishing $75 billion. We are looking at a fundamentally different tier of corporate fundraising here. So how did the actual trading day play out? Well, demand was incredibly volatile right from the morning bell. SPSX shares opened at $150, which was an immediate 11% jump. By midday, we saw this raucous rally push the price to an intraday high of $176.52. At that exact moment, the market cap actually crossed $2.2 trillion, briefly making SpaceX the sixth largest publicly traded corporation on the planet. Obviously, cooler heads decidedly did not prevail. Eventually, gravity took over just a bit, and the stock settled and closed at $160.95. But hey, that is still a massive 19% gain for day one. Moving on to Section 2, inside the SpaceX empire, because it's about way more than just rockets. If you bought SPX stock thinking you were just investing in the colonization of Mars or the moon, actually, scratch that. You're missing the much bigger picture. Back in February, months before the IPO, the company went through a massive restructuring. They aren't just building rockets anymore. They acquired xAI, the social platform X, formerly Twitter, and the generative AI chatbot Grok. So investors aren't just buying into an aerospace manufacturer. They're buying into a vertically integrated innovation engine. It's a combined aerospace, global connectivity, and artificial intelligence conglomerate, the whole shebang. And this really highlights the breathtaking scope of Musk's new vision. AI data centers in space, powered by the sun and connected by Starlink. That's the ultimate goal of mashing these companies together. The plan is to literally put artificial intelligence processing off-planet, tapping into unlimited solar energy, and using the Starlink satellite network to instantly beam all those signals right back down to Earth. I know, it sounds straight out of science fiction, but this is the actual business model investors just bought into. All right, Section 3, the retail investor frenzy. FOMO crashes the brokers. When you mix space exploration, artificial intelligence, and a celebrity CEO, the fear of missing out becomes a market force all on its own. Despite some serious concerns from institutional analysts about astronomical valuations, everyday investors desperately wanted a piece of the action. Just look at how the brokerages handled the stress test. Fidelity actually dropped its account balance minimum down to just $2,000 specifically for buying SpaceX IPO shares. Naturally, that led to an absolute flood of retail buy orders. Meanwhile, over on Robinhood, the volume of eager buyers was so massive that the app experienced temporary outages and delays during the hottest IPO in history. It's actually kind of ironic, isn't it? The companies promising to put AI in space ended up crashing top-tier terrestrial trading apps just through sheer hype. So the crucial point is captured perfectly in this analyst quote. We always aim to report impartially here on The Explainer, and this stark warning from financial analysts really cannot be ignored. They suggest that the hype-driven IPO might actually serve as an off-ramp for early private investors to cash out, rather than a prudent, fundamentally sound entry point for retail investors. It brings up a very valid question. Are everyday buyers just providing exit liquidity for the insiders? Let's look at Section 4, the cost of innovation.
funding the AI ambitions. This right here is where we find the central financial tension of this historic IPO. SpaceX's projected full-year revenue for 2025 jumped by 33% to a really impressive $18.7 billion. That's a massive vote of confidence, but critics are highly alarmed because in just the first quarter of 2026 alone, SpaceX spent an exorbitant $7.7 billion exclusively on artificial intelligence. I mean, that burn rate is extraordinary, even for a trillion-dollar company.
And where exactly is all that money going? Well, it's fueling SpaceX AI. That's the newly rechristened artificial intelligence division responsible for developing the Grok chatbot. Now, even though SpaceX AI isn't publicly traded on its own, it's fully enmeshed within the parent company. What that means is retail investors buying the SBIX ticker are directly funding and gaining financial exposure to this massive, incredibly cash-hungry AI venture. Which leads us to Section 5. Will Starlink go public? The cash cow of the cosmos. To understand how they can even afford that $7.7 billion AI burn rate, we really have to look at the true cash cow of the cosmos. Starlink now boasts roughly 10 million subscribers, and its 2025 revenues cleared $10 billion. That's a 60% jump from 2024. And it provides a crucial reality check for any investor. Starlink currently accounts for roughly 66%, literally two-thirds of all SpaceX revenue. So while the giant rockets and the shiny AI grab all the media headlines, selling satellite internet to end users is the actual financial backbone propping up this entire operation.
It's a brilliantly self-sustaining ecosystem. You see, unlike traditional telcos that have to lease satellite capacity from someone else, Starlink is a vertically integrated internet service provider. Step 1, they build their own proprietary satellites. Step 2, they launch them on their own company-owned Falcon 9 and Starship rockets. Step 3, they sell the service directly to the end user. That closed-loop system generates the massive, reliable cash flow required to fund the deep space rocketry and the XAI integration. All of this brings us to the lingering question on Wall Street. Will Starlink spin off into its own IPO? As international economic analyst Ilya Margolin points out right here, for Starlink, a separate IPO looks less imminent. And it makes sense, right? Even though the eye-popping financials might tempt Musk to take it public on its own, the fact is Starlink's revenue is currently subsidizing the rest of the SpaceX empire. That makes an independent IPO an open-ended uncertainty. Without Starlink's cash, well, the AI and Mars ambitions could just stall out. And that leaves us with this final pivotal question to consider. When you hit buy on a share of SPCX, are you investing in the noble colonization of Mars? Or are you just funding the creation of an off-world AI empire? It is the absolute core tension of this historic restructuring. Thank you so much for joining me today, Focus Learners. I hope this explainer helped you see past the hype and give you a solid, structured understanding of the real mechanics behind the market's biggest debut. Keep asking those right questions, keep looking at the data, and we will see you on the next explainer.